Hey everyone, in this video I wanted to bring to you one dividend stock that's down 53% off its high that I think you might regret not buying on the dip. Now, before I reveal what this dividend stock is, I'm going to look at some of its financial metrics, highlighting what I like about the stock, and then at the end of the video I will reveal what this dividend stock is. You're not going to want to miss that, so let's get right into it. Starting, of course, with its dividend yield. If you're investing in a dividend stock, one of the things you're most interested in is the dividend yield, and this stock has a very nice dividend yield of 6.09%. That's one of the healthier dividend yields available in the market in a sustainable fashion, right? There's a lot of higher dividend yielding stocks, but those dividends may not be sustainable. They may be imminently about to be cut. And so this dividend, I think it's one of the more sustainable dividends at a higher yield available in the market today. Now, another thing I wanted to look at is this company's revenue growth. Now, if we look back longer term, you see very nice revenue growth for this company. That is until the pandemic, where there was wild fluctuations up and down for this company. Now, I will tell you that this company benefits when people are buying physical things, right? When people are spending more money on services like they are right now, that's not very good for this company, and that's why you see revenue coming down since 2022, because that's when consumer behavior dramatically shifted in favor of services, things like travel, things like concerts and haircuts and those types of things. This company doesn't benefit as much from that. It benefits more when you're buying electronics, when you're buying new cars and things like that. So this shift has hurt the company, but it's temporary, right? It's temporary over the next several quarters, and I believe this will last several quarters. Consumers are still unleashing this pent up demand for away from home experiences. I don't think that's going to end in the next few months or even in 2023. I think this is going to last until 2024. There's a lot of pent up demand that needs to be unleashed. So, this company will likely experience headwinds in the near term, but longer term, it stands to recover as consumer behavior normalizes again. And similarly, its operating profit margin, which was absolutely excellent before the change in consumer behavior, this company was generating operating profit margins north of 20%, which is very, very good. But since consumer behavior shifted, so did its operating profit margin collapse, but still is in double digits. It's still very good at 11.86%. There's a lot of companies today that would love to have an operating profit margin of 11.86% that this company boasts, as its consumer demand has diminished somewhat as consumer behavior has shifted. Finally, the last reason I will highlight that this stock might be one that you might regret not buying on the dip is its valuation. Look at its forward price to earnings ratio of 10.27. This stock has never arguably been cheaper than where it's selling at right now. So you're getting this stock. Sure, it's got temporary headwinds, and it also has some legal troubles that may cost it some billions of dollars. But those things are likely already priced into the stock. It's cheaper than it's ever been. So all of that bad news, the headwinds, the legal trouble, the decrease in revenue, the decrease in operating profit margin, all of those forces have pushed the stock price down to the point where you can now buy it with all of that already incorporated in. And as it rebounds, as it recovers, which I place a good probability it will recover from this, then you will get this excellent dividend paying stock at a bargain price. So what is this dividend stock? Is 3M. This stock I'm talking about right now is 3M, that boasts a 6% dividend yield, trading at a bargain valuation at a forward PE of 10.27. I think you might regret if you miss out on this stock right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.